But what's going on, guys? Make sure you guys subscribe, like the video only if you like it, if it's helpful. And you know, this is going to be a stock video, so I'm going to talk about fundamental analysis. And with that being said, utilize the comments to let me know what you guys want videos on. And then this is the advice I give to you: comment very specific questions. The more specific it is, the easier it is for me to answer. And you know, instead of, you know, broad questions, what's the meaning of life, how do I trade options, or how do you make money, you know what I'm saying? But if anything, we're gonna go over fundamental analysis kind of as an intro. I'm gonna make a few videos on this, but as you know, it doesn't take a rocket scientist to know I'm not a real fan of technical analysis. I use fundamental analysis, and there's some interesting factors. So I want to explain how it works, kind of serve this as the intro to what fundamental analysis is. And you guys will notice it's not, I even said this on the webinar because we're going over in filings with the pledges right now. I teach them how to read filings, and that's part of fundamental analysis. But when you read like the 10Qs and the 10Ks, those are the quarterly and the annual reports for companies, you'll notice it's not all about balance sheets. You know, reading balance sheets is half of the equation, but the other half is reading the words and listening to the management and their discussion on how the company operates, and understanding when they're taking out everything from lines of credit to building new facilities, all the way. It's just a lot of words. You know, these 10K documents, these annual statements, they're like 100 pages, and 80% of it is just words. So yes, the numbers don't lie, and you can see stuff through numbers, but obviously, you know, these guys pay millions of dollars for accounting. You know, you can do a lot of accounting tricks where the numbers won't even say stuff, you know, as far as manipulating EPS, price to earnings, all that. Well, you can't manipulate price to earnings, but you can manipulate EPS, and that's earnings per share. So all these factors are fundamental. We'll get into what every single one of these things are in multiple videos so you guys can see, but I want to let you guys know what it is. I said this on the live stream. Fundamental analysis, what it actually is looking at a company from a fundamental business perspective and saying what makes this company fundamentally good or gives this company value. Now that's very important because it's saying, why should I invest? And to understand fundamental, and I can't say it today, fundamental analysis better, you got to understand why the stock market is used. So even if you're using options, because, and this is why I even say if you're trading options, you have to know about stocks. Options are derivatives. They get their value from the stock. So how the stock market works is the stock market's designed so that people could raise money. Daniel Torrejano, look at this guy, man. We got, shit, sending me Daniel with the eggplant. What's up, Daniel? Shout out Daniel. Daniel T, man, you know what I'm saying? But the intention of the stock market is so companies can raise money. You know, they go on the stock market so that people can give them money. They take that money, invest it into their company and their operations, and then they make more money, and then they return money to shareholders. You know, here's a pretty remedial example, but let's say I have a lemonade stand, and I'm saying I need an investor. You know, I want to go, my lemonade stand's doing good, I could ramp up my business. So you're like, okay, you give me $1,000. So you give me $1,000, I go buy sugar, lemons, water, and cups, and a table, and I even start hiring people. Damn, bro, why are you in front of me like that? I even start hiring people to start running the stand for me. So based on your $1,000 investment, that allows me to make $10,000 off my lemonade stand. So now, if I didn't have your $1,000, I wouldn't be able to make that money. But now you gave it to me, and as investment, I made $10,000. Now my company's worth more, and in return, I'm going to return your money back, and you own some of my company. So you're getting a dividend back, you're getting a piece of my profits, but at the same time, as my company becomes more valuable, you invested in me early on, and I'm making more money, and we're both rewarded for it. That's how the stock market works. That's why companies go public. So Apple sells its shares, you buy the shares, Apple gets that money, and they go to use that to make iPhones, to hire the best and brightest people to make fucking stylus pens and shit, you know? And that is the concept of the stock market. So this is why fundamental analysis is important, because you're the person giving the money. You want to say, hey, what makes this business good? What makes this business bad? What makes it where there's a likelihood that I'm going to get my money back and that they're actually going to grow? And then two, what are you paying for? So it's looking at the fundamental features of the company, you know, their business model. How do they sell items? Are they selling a service? Are they selling a product? How do they go about selling it? How do they go about marketing it? What has been their history with selling it? You want to see how they manage their cash. And this is where, you know, the balance sheet, and then also kind of the text around it. And just understanding what these companies do and have done, and their plans to be able to say, this company on a fundamental structure is good. You know, fundamental isn't looking at the price of the company. You know, this is what Benjamin Graham, you know, Warren Buffett's mentor, says, is that investors look at, you know, standards of value to determine the price of a stock. Whereas speculators and people, you know, using like technical analysis, they're using price as a standard of value, if that makes sense. So it's just looking at price, say, oh, it's worth $50, that's what gives it value. No, there's something underlying. And you know, that's where we get into assets, liabilities, and what you own, because, and that's where the numbers come into play, because how much money a company has in cash, how much they make, how many shares exist. You know, every share that exists is another company owner that pretty much they're splitting all the assets and profit. You're seeing what that piece of that company is literally worth. And now that's kind of the issue today with using fundamental analysis, because you go and look fundamentally, you know, there's standards back in the day where, you know, traditional investors would say, don't buy anything with a 20 PE or higher, you know, and 20 price to earnings is literally if a company makes $1 a share, you take whatever their price is now at the time, and then you divide it by the earnings. So if the price is $10 and it makes $1 a share, the PE ratio, the price to earnings, is 10. So, or you also hear this referred to as a multiple. They'll say it's a multiple of 10, meaning that the company is trading at a price 10 times higher than what it earns. So if a company like Amazon, they have a PE of around 300, I believe. So that means they're trading, when they're going at $800 a share, they're trading 300 times what they earn, which is kind of crazy. But, and that's the thing, that's the issue, because this is why people say fundamentals don't work and nowadays, is because everything's so high. And that is true. Everything is priced so high because stocks have been around for so long. You have inflation, the dollar, all that stuff. But with prices being so high, it's hard to say, oh, well, everything's fundamentally going to be too expensive based on standards. However, what I say is you should be able to understand, you know, price to earnings, how it relates, and say, well, based on traditional standards, this is over or undervalued. Most things are going to be overvalued. But then it's also being able to use fundamental things and understand the time frame and really the climate to which you're in. If all stocks are like that, it's not to say fundamentals don't work. You just now have to use your fundamental analysis to compare it to the relative market. So the example I give is the auto industry. You know, most auto industry stocks are trading at a 15 to 20 times multiple. So if you go see now an auto company like Tesla, if they're trading at 250 price to earnings, they're relatively overvalued. By default, even the 15, 20 might be overvalued, but when you look compared to the industry, that's overvalued. But now, let's say the industry average is 40 or 50, and then there's an auto company with a PE of 30. Even though that's higher than like the traditional 20, relative to the industry, you could say that's cheap. But now that's not the only factor you use, and that's the thing I want you guys to understand. To get a grasp of how to use fundamental analysis, you need to understand business. You need to understand business structure, and really, can you look at a company, look at their management and their plans, and be able to say, this is a good company versus this is a bad company. So that is kind of the barely scratching the surface. There's a lot more to it. You know, we're going to talk about how to analyze. There's so many specific factors, and they take a lot of time. You know, you could find your fundamental information, reading balance sheets, reading filings, just seeing updates within the company. But we'll get into those, and I'll make videos on them. But let me know what questions you have, so for the next video, I can make it a lot more specific. So let me know how you guys feel about that. Let me know if you learned anything new. So again, subscribe, like the video, stay in school.